If you don't find a way to make money while you sleep, you will work until you die. Passive income sounds fantastic. Money comes into your account even when you are sunbathing on vacation in the Caribbean. I don't think I know anyone who doesn't like that. Maybe hard-working people on low pay? Come with me for tips on building a passive income that you too can create. In today's video you will learn why build passive income, Americans' fears about the future, 5 tips for passive income assets, what are the yields on each asset, why build passive income. As Buffett said, you should make money while you sleep or do other things you enjoy. When you start building passive income, you have a huge advantage for the future. The money you invest or create now can start working for you today and then provide you with income for many years in the future. Americans' fears about the future. Most Americans are concerned about underfunding their retirement. According to a 2008 Gallup poll, nearly 2/3 of Americans, 63%, worry about not having enough money for retirement. These concerns were surpassed by concerns about not being able to pay medical expenses, 56%, and maintaining their current standard of living, 55%. Despite current economic challenges, Americans' most pressing concern is not having enough money to retire comfortably. 5 tips for passive income assets. High-yield accounts. Many people leave their money in banks in savings accounts with 0.01% interest. I really don't understand that. If you look at this table, it's nice to see that if you put your money in the 5 best performing accounts, you can easily get 5% appreciation. I remember a time when banks threatened negative interest rates and clients had to pay to keep their money in the bank. It wasn't that long ago. I suspect it was 2014-2015. The idea that I could have 5% in a savings account was science fiction back then.
I'm just going to explain the consequences, both for banks and for savers, of negative rates. So assuming I put this banana in my bank for 1 year with negative rates, when I come back 12 months later, what happens to my banana? There you go. That bit disappears. If the banks impose negative rates on depositors, then they risk deposit flight. The consequence of deposit flight is that it lowers the potential capital available to reinvest in the economy, which is what banks are supposed to help us do.
Bonds. It's simply a loan with interest. In a bond, the issuer, the one who issues the bond, receives money from the lenders and pays them interest in the form of coupons over the term of bond. At the end of the agreed period, the issuer returns the borrowed capital to the lender.
Always makes me feel a little melancholy. A grand old warship being ignominiously hauled away for scrap. The inevitability of time, don't you think? What do you see?
A bloody big ship.
Safe investments include government bonds, highly rated corporate bonds and short-term bank bonds, which offer stable returns and lower risk. Personally, I don't invest in bonds because of their low yield, but they are recommended by Warren Buffett and his mentor Benjamin Graham as a complement to a stock portfolio. Peer-to-peer lending are among the riskier investments compensated by relatively high interest. Loans are provided to individuals or small businesses through online platforms such as Lending Club, Prosper or Upstart. The investor provides the funds and revenue is generated from the interest the borrower pays on the loans. This form of investment offers the possibility of a stable income while diversifying the portfolio, with some platforms offering automated investing for easier investment management and minimized risk. I tried peer-to-peer and invested a few $100s. Unfortunately, I lost most of the money because the borrowers decided not to pay me back. It was a boom period, kind of like investing in Bitcoin today. Buying property through REITs. The basic passive income is undoubtedly real estate investment, whether in single-family homes or in individual apartments in condominiums or commercial rental properties. Personally, I have a long experience with apartment rentals. I have several apartment units that I rent to people who want to live closer to downtown and don't have enough money to buy their own place. But I have to say that it is definitely not a passive investment. It has to be painted from time to time, furnished, replaced, a new tenant found. It's a lot of work, even though it's definitely not a full-time job. Investing in REITs is a logical alternative to traditional real estate investing. Real estate investment trusts, REITs, provide investors with access to real estate investments without the need for direct ownership. REITs are companies that invest in commercial real estate, such as office buildings, shopping malls, apartment buildings, etc., and distribute most of their profits as dividends to their shareholders. It is a liquid investment where a share in a REIT can be sold at any time. For example, I made this video about it. Dividend stocks. There are thousands of companies in the stock market that pay a dividend out of earnings to share with shareholders on a quarterly basis. You need to take the time to choose a stock so that you buy a title that will pay a high enough dividend that is sustainable over time. Personally, I would only invest in dividend aristocrats for the long term that increase the dividend every year, are part of the S&P 500 index and pay a dividend for at least 25 years in a row. The dividend ranges from 2.7% to 6.4% annually. Index ETFs are conservative investments and are broadly diversified compared to investing in individual stocks.
The trick is not to pick the right company, it's to be, because most people aren't equipped to do that, and plenty of times I make mistakes on that. The trick is to essentially buy all the big companies through the S&P 500 and to do it consistently and to do it in a very, very low-cost way, because costs really matter in investments. If returns are going to be 7 or 8% and you are paying 1% for fees, that makes an enormous difference in how much money you have on retirement.
They usually track a major index such as the S&P 500 or the Dow Jones Industrial Average. For example, the SCHD title or Schwab US Dividend Equity ETF is a fund focused on US stocks with high dividend yields. The fund tracks the performance of the Dow Jones US Dividend 100 Index and seeks to replicate its composition. Index funds are purchased in the stock market just like stocks. A number of units and a buy price are chosen and that's it. It is an elegant way to have a broadly diversified investment with a specific focus. In our case, with the aim of earning a dividend. What are the yields on each asset? To give you an idea, I've summarized the typical yields for the asset classes shown in a video in a table. Bonds typically offer lower but stable returns, while peer-to-peer lending can provide higher returns but also with higher risk. Next are investments in real estate REITs, which are an interesting alternative to physical real estate. Dividend stocks offer returns of between 2 to 6% per annum with the potential for growth in share value. Index funds, which track the performance of market indices, can offer a wide range of returns depending on the performance of the index. If you're keen to start building passive income, you need to get to know each asset well, understand it, and then decide whether to invest in it. Take your time, educate yourself, try it out, and then go all in. It's not as complicated as it may seem. The best feeling is when the money starts coming into your account regularly. That's a great inspiration. It's cool that you made it to the end of the video. I will be very happy if you give the video a like and click subscribe. I have a lot of investment videos that could teach you something, so sink into your seat and watch my next video. Have fun and invest wisely.